You're thinking about starting a business. Before you file paperwork, open accounts, or spend that very first dollar, there are 5 financial steps that you must take to avoid costly mistakes. Today, I'm joined by a real working CPA who helps business owners start right. So let's get into it. But before we do, let's start this business off right. Hit the like and subscribe button. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you can only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the bank of the community. Hello, I'm your host, Brent Cannon. I'm the president and director of community banking here at National Bank of Arizona. Thanks so much for joining us today. Today, we're joined by a very knowledgeable guest, someone that we often send our business clients to, and someone who works with businesses even before they open their doors for the first day of business. So I want to welcome Mario Anelis from Anelis & Company CPA firm.
Thank you for having me, Brent.
You got it. At Financial Sense, we focus on insights that you usually can only get from having a friend in the business. Today, you essentially get 2 friends in the business, a banker and a CPA. Mm-hmm. Today, we're going to walk you through what you should do before and immediately after you start your business. Mario, before we get started here, I'd like you to share with the audience a little bit about your company, about your background, and who you help.
Yeah, absolutely. Thank you so much. We're a CPA firm. We've been in the Valley for over 10 years now. My experience stems from back 25 years when I first started my career, also here locally. My background's in accounting, my undergrad, my master's, all that's in accounting. And we decided to start the firm mainly to serve the underserved market. There's a lot of businesses, a lot of nonprofits that we know aren't getting the services they need, they deserve.
Right.
And our focus priority became on serving them.
I think that's a wonderful mission. We share that mission. Mm-hmm. We talk a lot about banking the underserved for those businesses that historically have been undercapitalized, haven't had access to capital. Right. And so you're starting with, hey, let's get your affairs in order, your books in order, and we're hopefully at the end saying, we have money for you, right?
Yeah,
so,
exactly.
Team effort.
Exactly.
So before we dive deep, let's start at a high level. From your perspective as a CPA, what are the 5 things a new business must do to kind of get started on the right foot financially?
Yeah, the 5 would be choosing the right business entity, separating your business from your personal activity, or setting up the proper accounting.
Right.
Understanding the startup cost and planning for taxes.
Yeah, those are 5 pretty important high level. Now, with those, let's kind of dive into each one and provide some insight for the audience why they are so important as they get started in their business. So let's start with entity selection. Why is that important?
Yeah, one thing we run into pretty often, I'd say 9 times out of 10 when a client comes to us, they've usually outgrown their corporate structure.
Right.
And what many businesses fail to do is they plan for or they go with whatever's easiest.
Right.
Whatever's cost effective, and that's usually an LLC.
Right.
Not realizing that a month from now, 6 months from now, a couple of years from now, they'll likely outgrow that. And many tend to outgrow that very quickly. Yeah. Choosing the wrong corporate structure usually leads to at least a couple of issues. One is overpaying in taxes.
Yep.
They have the wrong setup, and they're missing out on a lot of the tax credits that are out there, a lot of the benefits depending on which industry they're in. Second is asset protection.
Right.
Many organizations set up what's easiest, and as a result, then now they're exposed from a risk perspective. So it's very important to know what your growth is going to look like in a year, in a few months, what type of exposure you're going to have legally, and plan for that ahead of time so that you're not constantly having to go back and fix your structure, which very timely, very costly. And sometimes very limited. Once you start, unraveling that could entail quite a bit.
Let's talk about the liability considerations. I don't think most business owners that are starting out understand how important that is in terms of minimizing your liability with the entity structure you choose.
Yeah. Very, very. That's one of the most important things. Yeah, like you said, many small businesses start out with a great idea, a passion for it, hit the ground running,
right?
Without realizing that every day they go out and provide this service or sell this product, they're exposing themselves, their personal assets. So at a minimum, creating that LLC gives you some barrier, some distinction between your business and your personal assets.
Yeah. To
where if you're operating that correctly, and I'll define what that means in a second, as long as you're not neglecting, or as long as there's no negligence, then you're protected to some level. And generally what that means is that if you're operating your business in a responsible manner, something happens, then your personal assets are protected.
Shielded.
Shielded, yeah, the corporate shield. But it is important to also know how to operate your business to have that protection.
Right.
And generally, I don't know if I'm going to jump ahead, but
No, go ahead.
generally it's splitting up your personal activity and your business activity.
Great segue.
Yeah.
That's I think our second point. I wanted to ask you specifically about that. What problems do you kind of see when business owners tend to commingle personal and business assets, liabilities, income, expenses, et cetera?
Yeah. One of the things we see often is they're running their business account or their personal account interchangeably.
Right.
They're charging personal things to their business account or vice versa. And under a legal issue, generally, if it's easy to prove that there is no distinction between you and your business, then you've pierced the corporate veil, essentially, meaning that under the law, you and the business are one and the same. You've now completely dismantled your protection, your LLC, your S corp by doing so.
Right.
So it's very important from the very beginning to not only have separate bank accounts, but to also ensure that you're incorporating the discipline and operating both very distinctly.
Yeah.
That's rule number one that I would recommend.
So thinking back to the first point of the importance of choosing the right entity, even if you're a sole proprietor, to have separate bank accounts and separate accounting as a sole proprietor.
Absolutely. Yeah. Not only the legal benefits of just having that asset protection, but also just having clarity on how you're running your business.
Right.
If you're commingling the both, it's not going to be very easy to tell, how much it's really costing you to operate your business.
Right.
And in fact, how much profit you're really generating or how much loss you're
Right.
incurring that you have to, figure out how to resolve. Right. So very, very important.
Mario, I really think that's a critical point for small businesses to make sure that they have especially their banking set up. At National Bank of Arizona, we've just launched a new suite of business checking accounts, and we have basically 3 accounts in this suite for small business. So for well-established businesses, we have our top of the line Business Beyond that has a full payment package and a lot of other features that frankly make a lot of sense for a small business. But we also have products Elevate and Launch, or Business Elevate and Business Launch, that support businesses that are younger in the life cycle. Business Launch is set up for businesses that are just starting. Business Elevate are for those younger businesses, and then ultimately Business Beyond. And so it's a very powerful business checking product suite for small business. Really, the point is that these checking accounts grow as the businesses grow. Their needs become more sophisticated. These accounts are set up for those. We'll drop a link in the description for those of you who have an interest. For now, let's go ahead and move on to the next important point.
Okay.
So our third tip, setting up the basic accounting. So what does basic accounting mean for a startup business?
Yeah. You mentioned accounts. That's usually a pretty good starting point, because usually what we recommend is invest in any cost-effective accounting system that's out there. There's a lot of them.
Right.
And typically most just connect to the bank account. At a minimum, that way when we're seeing this client, we at least have some access to transactions, because in most cases they're not accountants.
Right.
All right. So setting up, it's the basic accounting system is important. Setting up and working with your bookkeeper or a CPA to get this set up. Working with your chart of accounts, getting that set up. Knowing what you're spending monthly, that's pretty critical. And keeping it simple as well. When you're starting out, you want to build some momentum. You want to you don't want to get super technical too quick or too fast. You want to ensure that what you're seeing makes sense to you from an operational perspective. So you also want to keep that in mind. There's going to be ultimately what we call different versions of books. There's your internal books that should make sense to you as the manager, as the owner. Then there's the external books.
Right.
Those are the ones we need. That's usually where you want to get a CPA involved. That makes sense to the banker. Right, to the stakeholders.
Right.
So I would say to start, keep it simple. Set up, what's within reach.
Yeah.
Get some input on a system, and just start the momentum on getting it going, versus waiting till it gets to where it's a monumental task that's just more and more challenging to catch up on.
Yeah, that's right. So how important is it for a small business owner to understand accounting? Clearly, your business, you're there to support, counsel, provide insight, but how important is it for a business owner to kind of I see a lot of small business owners go out and buy these off-the-shelf accounting software,
right?
And a lot of times it's not done right. So.
Right. Yeah, I would say maybe it's not as important that they know the accounting What is important is that they understand what the numbers and the accounting is
Right.
telling them. And that's usually where there's a bit of a gap. We work with entrepreneurs and we work with businesses, startups to going public and everything in between. I'd say the consistent trait we see that it doesn't matter which size or what phase you're in, that seems to be attributable to a business succeeding,
Right.
is that the business owner understands their numbers. And this isn't because they're good at math or they're good at accounting. Typically, it's they're exposed to it so much
Right.
that they're, even if they interpret it or it applies to them in a certain manner, but they're so involved in the operational part that over time it starts to become almost subconscious, where they're making decisions with kind of this music playing in the background on,
Yep.
all right, I'm going to expand, or I'm going to invest in marketing, or I'm going to hire this person. And on the back end, they're calculating, what's it going to cost? Can I afford it? What's the return on investment? These are things that after you get more and more familiar with what the numbers are telling you, it tends to become second nature and part of your decision making almost naturally.
Right.
And when you're doing that, now you have a much more balanced approach to how you're making decisions
Sure.
daily, which is critical.
Yep.
One bad decision for a business owner could be detrimental,
Yep.
right? So getting in that habit, I think, helps, and it takes time. It's not overnight, but you don't need to be an accountant. You don't need to be good with numbers. That's why it's important to get involved with the professional early on.
Right. I just can't. I think that's so important to work with a professional to understand, build that foundation,
Yeah.
so that when the business is 2, 3, 4, 5 years old, or 10 years old, hopefully, and has grown, 2, 3, 4, 5x, that foundation's built. They truly do understand their numbers
Right.
because of that relationship.
Yeah, exactly.
Yeah, that's powerful. So tip number 4, let's talk about startup cost.
Mm-hmm.
From what you've seen, where do most new business owners underestimate the cost?
All over. Yeah, it's generally pretty standard, where they typically don't have a whole lot of context or haven't yet gone through the exercise of planning ahead to really
Right.
develop the budget and know what things cost in general. So we find that it's pretty prevalent across the board. Typically, the areas where we see that this is under budgeted or underestimated is advertising, marketing, or client acquisition in general.
Yeah.
Many think that I got a great business, or I should say, I got a great product, a great service. I'm going to open the doors, and everyone's going to come running to buy from me. Right? Not the case. You usually have to work pretty hard, and whether it's sweat equity, or you're actually investing in marketing, advertising, outreach, there's a client acquisition cost that's usually underestimated significantly. So that's one big area.
Mm-hmm.
Second, it tends to be around infrastructure. Knowing what it takes to build that foundation that we've discussed, the right systems, the right processes, the right technology, the right software, and everything that related to that. Typically, that's a second thought. When you're opening up a business, you want to. You know what it may cost to buy the product that you're going to sell,
Right.
or what it costs to maybe hire the people to provide the service. Typically, you don't plan that much for the support services.
All of the infrastructure.
Right. So those are the two big areas we constantly see that are overlooked.
What about owners paying themselves?
Mm-hmm. Yeah. Also, very important. That also tends to be a misconception as well. Many entrepreneurs start and think that they can't pay themselves until they're profitable, which it may not be an option. So they may not be in the position to pay themselves.
Right.
But the part that they're overlooking at times is that they're also playing a function within their business. They may be the manager, they may be the customer service rep, they may be the salesperson. So really understanding what it costs to deliver on that gives them a better idea of what it takes to run the business. Because if they have to replace themselves, they have to pay for that position.
Right.
So what most business owners do is when things go well, when they have a great month, they'll pay themselves, or they'll take the cash out. When they have a month not so good, then now they have to reinvest it. So we always recommend putting a salary and budgeting for that. And in the first couple of years, at least, at a minimum the first year, is whether you're profitable or whether you're not profitable, is leave all that cash in the business.
Right.
That way you can build your reserve. You can also weather, the seasonality that most businesses go through, and you're not constantly having to deal with investing money in, taking it out. You can really just have a lot more stable organization.
Sure. So tip number 5, and this is a big one,
Mm-hmm.
planning for taxes. what tax issues tend to catch new business owners?
Yeah, great question. Because there's two issues there, or two questions maybe. One is understanding which taxes you're responsible for. The second is planning for those taxes. Both are issues that we see constantly. The first is knowing which taxes you pay, you're responsible for.
Right.
And the one we get often is sales tax. Organizations that are retailing anything likely are responsible for sales tax. Many businesses don't know this, and so it may take that first tax year for a CPA to get involved and know, hey, it looks like you haven't paid your sales tax all year, which is usually a significant amount. So understanding which taxes you're responsible for, that's number one. And just to give some examples, there's payroll tax, there's sales tax, there's income tax, there's
transaction privilege tax. Is that what they call it?
yeah, sales tax.
Many years ago, we built some homes, and we were so thrilled with our profit until we understood we owed this thing called transaction privilege tax.
Right. Yeah.
So that's I'm a real life example of someone who clearly hadn't spent the time at CPA I should have.
Right.
Didn't understand all the taxes that were due.
Yeah. A great example, I think, in the construction business is where we see this being overlooked often. So that's a great example. And again, to your point, having that understanding early on, likely would have allowed you to even structure your bids differently, right? And ensuring that you're competitive as well with those bids. So that's important. Second is then planning to actually pay these taxes.
Right.
Many, as I mentioned before, especially small organizations, they're living off of what they're making that day or even that week, and properly planning for their cash needs isn't always top of mind.
Right.
And what that leads to is that at the end of the year, if you're profitable, you now owe a tax, and if you weren't making estimated tax payments each quarter, now you're having to deal with all of it up front.
Right.
For those that are W-2 employees,
Yeah.
you could say one of the benefits are you're getting that taken out of your check, right? And because you're used to it, you don't feel it as much.
Right.
At the end of the year, you hopefully had enough withheld, and you don't pay anymore. As business owners, you don't tend to have that structure. Typically, It's up to you to figure that out. So planning ahead, making sure that you're saving enough, you're making quarterly estimated tax payments, so that you're not getting hit with penalties and interest on top of that. That's important because the IRS isn't going to come in and help you plan for that.
That's right. Because if you don't plan for that, you end up with potentially a major cash flow issue.
Yeah.
That in business owners thinking, okay, now I can invest in this or expand that. Buy this piece of equipment. It's like, I have a big bill due to the IRS or to another taxing agency. That's got to be incredibly important to factor in.
Absolutely. Yeah.
So those are 5 great tips. And the fact that we're sitting here doing this podcast, a banker and a CPA, in your experience, how have you kind of seen the outcomes for businesses benefit when a bank or banker and CPA are aligned early in the process?
Yeah, early on, it's important for businesses to have the support around financial planning, forecasting, budgeting, planning ahead. And I think inevitably, whether your business is doing well, growing rapidly, or maybe not so rapidly, you're going to run into a point where there's a need for capital.
Right.
And the reasons we see often is you're growing and your AR is growing, and now you need some capital to float that, or you're growing and now you have more infrastructure needs, more equipment needs, and same reason you need more capital for that.
Right.
And so generally having that foundation at the beginning that we've discussed and having very, very clear numbers allows both the banker and the CPA and the client and the business owner in this case to really be on the same page on what they can afford, what they can sustain within their business, what's feasible, what potential pitfalls there are with bringing on this capital and not structuring it correctly.
Yeah.
And ultimately what that capital may do, that injection of capital would do for the business. Because if it's going to allow them to grow even more, give them more financial capacity, then it tends to obviously be a no-brainer. But knowing and having that clarity and having everyone work together to figure that out is important.
I'll tell you, from a banker's perspective, what I see is when there is a strong CPA involved with the business, it provides a level of confidence to the bank that we can rely on those numbers, those projections. And having said that, the inverse of that, when we find that there's not integrity in the numbers, man, the amount of confidence that flies out of the deal, that becomes very difficult to have a relationship. So
Right.
getting that capital, debt capital to provide growth or any other reason the business may need it. So for me as a banker, when I know there's a strong CPA involved, now I can have a level of reliance on the business. And we're talking, a lot of small businesses. So we're not talking about reviewed or audited financials. In some cases we are, but in some it's just, it's to make sure that, when we can believe that there's integrity in the data and the numbers, now we can kind of start and go from, step one, as opposed to going, I don't know if that revenue or that expense or that asset or liability number is right.
Exactly. Yeah.
Mario, I assume that you've probably worked with a lot of startups, a lot of entrepreneurs. In your experience, what are some of the things that young entrepreneurs should consider thinking about starting a business?
Yeah, the first would be doing a market study, really understanding what it is that they're going to be selling or service they're going to be providing and which market they're going into, and seeing first if there's even a need.
Right.
Right. And if there is, who are you competing against?
Right.
And how do you stack up against that competition? So usually that, especially for smaller businesses, that tends to also get overlooked. You're starting a business and you're going to start it in your neighborhood because that's what's convenient, right?
Right.
That may not be the right place.
Right.
That's one. Second is really having clear goals, and how we help translate that is into a financial forecast or projections. And these are numbers we're constantly looking at, even for well-established organizations. We're looking at the accounting gives you good historical context, but that's historical. That information isn't that relevant. What is relevant is what that means and how that leads to your next steps.
Right.
And so we're constantly looking at that for growth. And if we're projecting or investing, if we're investing this capital, what is that going to lead to in terms of growth? Going back to the tax area before. What will this lead for? What would this lead to in terms of tax liabilities, and what can we do now to mitigate that legally?
Right.
And there's a lot of options out there. The tax code's designed to incentivize business owners, so that's where it gets a little more complex. Is partnering with a professional, because there's a lot of credits, a lot of deductions, a lot of incentives in the tax code, especially for growing businesses that are investing in staff, investing in infrastructure, investing in growing the economy.
Yeah. I tell you, it's in my experience, the projection part of this for small business is the most difficult.
Yeah.
But starting out, I love the market study and the feasibility. Makes all the sense in the world. And I really like the forecast and budget, because when we sit down with a new business and part of our deal is based on speculation or the future, which they all are, but if we don't have if we don't have years of history to hang our hat on, we're looking at the front windshield.
Yeah.
And so to have a company who has gone through and has a strong forecast with defendable assumptions, that's really the key.
Exactly.
That's where I think that forecast, and we can begin to really have a lot more credibility. It'll have a lot more credibility with the lenders.
Oh yeah, absolutely. And one thing I'll add too is the other benefit that we look at in forecasting is that when it's a newer business, typically you don't know how you should be operating,
Right.
and there's industry benchmarks that we start comparing ourselves against. And so when we're looking at areas where we're way out of range, putting a corrective action and taking steps and then planning for what that benefit will look like, I think gives entrepreneurs, business owners a lot more clarity on why they should be looking at improving their business. Here's a direct benefit to your bottom line, or here's a direct benefit to your cash balance. So another reason why, to your point as well, that having good forecasting, good projections just helps overall plan ahead and be prudent in the way you operate.
Yep. Mario, I think those are 5 great tips and really provide some insight to business owners, existing business owners, and maybe more importantly to folks who are thinking about starting their business. To build a relationship with a CPA and to build a relationship with a bank early on is going to pay dividends. I think the old adage is, by not planning and knowing where you're going doesn't necessarily guarantee that you're going to fail, but your chances go up exponentially if you build a plan and understand the financial foundations of where you want the business to go. And that can be done with a firm like yours and working with banks who understand small business, and more importantly, really understand the importance of what small business brings to the overall economy.
Right.
So
Yeah.
thank you so much for joining us.
My pleasure.
Today.
Thank you.
And I also want to remind everybody to reach out to Mario. Mario, how best can the audience reach you?
Yeah, I think the link is in the chat. They can email us, visit our website, stop by the office. We're centrally located. And stop by and see us if you have any questions.
Thanks, Mario.
Thanks.
So that's it for today, folks. Don't forget to check out the links in the description and watch us on YouTube or listen to us on your favorite podcasting platform.